Well, U.S. home prices have fallen for the 7th straight month.
That's right. In January, prices fell, drum roll please, I think we're going to show it to you as well, 0.2% from the previous month. And then below that, you see that prices are actually 8.8% higher than they were in January of 2022. Joining us now is Jason Lewris. He's the co-founder of and the head of Parcl Labs, and he's joining us from here in New York City. So, Jason, Lana and I were trying to understand, okay, is this good news or bad news? It likely depends on where you are in the economy, but this slight easing of prices for homes, is that a sign, though, inflation may be cooling? How are you reading this?
Great question. And first of all, thank you for having me again. It's great to be here. So home price declines, and where is this all coming from? So yesterday, the Case-Shiller Index reported January numbers, and the Case-Shiller Index is one of the leading indices around home prices. The problem here is January was over 2 months ago. It's almost April, and a lot has happened in the residential real estate market since then. And so what we're seeing using real-time housing data from Parcl Labs is a recovery of the housing market in all major metros that the Case-Shiller Index tracks. So it's positive news for home sellers. Now, for home buyers, if you think you're getting into the bottom now, that is not accurate, as home prices are starting to tick up as we roll into the spring.
Mm-hmm. Yeah, that's a really important point, because when we're talking about month-over-month prices, looking at something like eggs, that's fine because the demand stays the same. But when it comes to real estate, that changes, especially in summertime and in the spring as people are buying and selling homes more. With the Fed raising interest rates again, how might this affect the housing market now as we're heading into those busier months? And give us some perspective then on the year over year, even though that's quite a lag, not just talking about a couple of months, it's a year's lag and doesn't take into account all those interest rate hikes that the Fed has kindly provided us with. But what's the overall picture? And how much does the housing market factor into the inflation that we're all feeling?
Yeah, three great questions. So to start with interest rates, it depends on the market, but there is a strong relationship between interest rates and housing demand and home prices. Now, to give an example, we track this on a daily basis in regards to that relationship. In Phoenix, which was a pandemic winner during the pandemic, the home prices went through the roof and have since started to precipitously decline until as of late. It's about 4 weeks for interest rates to have an effect on home prices. So if interest rates go up today, in 4 weeks, we would expect home prices to decline as there's a strong negative relationship. Now, this is market to market dependent. In some markets with a heavy prevalence of investor activity and high cash offers have a positive relationship with interest rates. In regards to the year over year, what we've been tracking very closely is what we've been calling the regional divergence. And I think this will continue to persist throughout the rest of 2023. Now, what is the regional divergence? What we're seeing is in the West Coast, home prices are behaving much differently than what we're seeing on the East Coast. And there's almost a clear split down the middle of the country. And markets like the Southeast were very resilient to home price declines during the declining periods over the last few months. And I would expect year over year changes to be at a regional location. Some housing markets may actually be up year over year. Others have already shown indications of being down year over year. And lastly, on inflation, and this is one that's top of mind for many folks. Housing plays a significant role in inflation. As a matter of fact, it's almost 1/3 of how the Consumer Price Index is calculated. Now, the major issue with how the housing input is used in the Consumer Price Index is it has a lagged effect. It's about 6 months. And the way that they calculate this, a significant component of it, is they're calling home buyers and asking them how much they would rent their own home for. And this has been shown not to have. Yeah, it's very interesting. And in bear markets and bull markets, it's actually in the opposite effect, as people don't have a really good sense of the environment themselves. So what this means for inflation is we're now seeing home prices starting to go up. We know in 6 months from now that will start to go into how the consumer price index is being calculated. So there's no clear indication overall that prices are going down. So I think it's going to be a very bumpy road for inflation, at least over the next 6 months as home prices continue to go up.
Jason Lewis, you have the best memory. That is the best, most comprehensive answer to a three-part question I've ever heard in my life.
I'm sorry.
But we covered a lot of ground. Jason, thank you so much for joining us today. That was wonderful.
Of course. Thanks for having me.